Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. S&P 500 is currently up around 93 basis points. On the 1 hour chart we are touching the overbought RSI, and on the 4 hour MACD we turn negative and looks like we may turn positive, so there could be more room to the upside. On the daily chart, it's very good case for the bulls. Why? As you can see, it found support on the 18-day moving average. It closed above it, and we proceed to break out and above the 9-day moving average. So we may touch the all-time highs again. And if we were to make support, I would find support at around the 50-day moving average, and that coincides with past resistance, and past resistance act as support now. And this 50-day moving average is about slightly higher than where we were hitting as resistance early on in the year or last year. So a serious floor here. We may get another all-time high, and then we may proceed in a sideways motion touching the 50-day moving average eventually. On to the next module, I'll compare today's current trend with this trend that dated back to August 16th, 2006 to November 9th, 2006. I'll point out why these two trends are similar, so let's get started. What we have here in the beginning of the trend is we have a dip or touching the middle Bollinger Band, and another touch on the middle Bollinger Band once more. Afterwards, we see several weeks of uptrend and another touch on the middle Bollinger Band right here. And we are currently at this point. So let's check the chart in question. So again, we have a touch on the middle Bollinger Band, and then another touch on the middle Bollinger Band. If you're not familiar with the Bollinger Band, it's a tool used to measure price level and volatility. So after two touches, we have several weeks of uptrend, and after that, we found a floor on the middle Bollinger Band once more, and we have 1, 2, 3, 4 points, and we have 1, 2, 3, 4 points that are similar, and there's reason to believe that the trends and patterns are similar. The outcome and forecast would also be similar. So let's check the forecast model. I'll go day by day where S&P 500 or SPY will head to in the next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So again, the chart that we took a look at was August 16th, 2006 to November 9th, 2006. At that time, the S&P was up around 1.7% up, and we may have possible news next week of successful trade talks with China. And here's the chart that I compared it to. I overlapped it with the current trend with the one in 2006, and that is it. If you enjoy this content, feel free to like, subscribe, and thank you for watching.